Hello traders, Matt Chapman here, and I've been doing some analysis over the weekend, and I've uncovered this very interesting chart on the pound CAD. This is a 30-minute chart, and let me just go through some of the logic, some of the thinking behind the analysis, and why I think big money is likely to get long this pair this week, perhaps towards sort of the mid to end of the week. So you've got plenty of time to plan for this and watch out for it. Again, this is the 30-minute chart of the pound Canadian dollar. All right, so if one of the things that I want to really try and get across is that you want to take a holistic view of a price chart or whatever it is that you're trading as you possibly can. You've got to take into account as many different factors as you can that build up a story, build the narrative for your particular trade idea. And if we look at this particular scenario, you can see this big drop that occurred previously. The reason why I've highlighted this box in here is because that type of price action is very indicative of dragging traders in. It's a very emotional type of price action, and what that does is that takes a trader from essentially what would be I guess a sterile inactive position where they're not interested in taking trades to one where they are poised and pulling the trigger to get in, because there's the FOMO effect, right? Fear of missing out. People see the big move. It elicits a very emotional response in people, in human beings. It's just how it is. And that particular type of scenario draws traders in the wrong way, and they essentially get trapped down at those lows, and then they're being dragged into super deep water, obviously, and that's not worked out too well for them. And if you notice that we've kind of had a similar thing happening here as well. Price has been coming down. The psychology of this chart will have been somewhat short to a certain degree. Although you could make the argument this is part of a bigger trend, and I accept that as well. But a lot of retail traders, amateur traders, or people who don't have enough experience find it quite hard to reconcile how trends and bigger time horizons fractally fit into the lower compression. So without getting too lost in the weeds there, what I mean is, if this has been trading down for like, if you just highlight that area for a week, oftentimes traders get very focused in on here, and they kind of get snowblind and they miss the kind of bigger point. So the recent psychology of this chart is to the downside. And of course, if traders were trading this particular pair short, they get caught, and that prior bit of price action before we have this very strong move higher would have been indicative of dragging traders in. It's also late, as it always is. It's late in the move, right? It's been underway a little while. That again is always a bad sign when you get that acceleration towards the end of a move. It usually sometimes referred to as a blow off top or blow off bottom. I'm not suggesting this is a world-beaten version of that, but it certainly is at the end of the move, and it certainly will have dragged a lot of traders in south. Now, for those people who were trying to maybe get long inside of that trend, perhaps, then they're probably doing all right. Not everyone loses, obviously, but what this price action in here has done is it's again focused the minds of and the psychology of a lot of traders. This type of price action is very much that emotional price action that you can see here, and it's unsustainable. It never follows through to any great degree, but it's the type of price action that drags the traders in off the sidelines and gets them taking trades. Now, what that has done in this scenario is it's created a problem for these traders going long in here. You can see that this is just a wash with market manipulation. If those traders are taking this really shallow pullback, I don't know what that is in terms of a Fibonacci. It's not very deep. I don't even know if I've got that measurement. Oh, there you go, 20 odd percent, 23%, something like that. It's extremely shallow pullback, but it's equal lows. If you can see that, you've got 1-2 touches, very accurate They get stop hunted, and then people who are trying to be cute and try and get on board, because this move behind here is ever looming large in the psychology of these traders in here, because they want to get in because it's exciting price action. It drags the trader in off the sidelines. You know this to be true because you've felt this yourself a million times. And it's really just a reflection, trading the markets is just a reflection of your own psychology and how you interact with price and the markets yourself. You can then extrapolate that across, however many people you want, and it's very, very similar for everybody. So you do have people trying to get a little cute. Let's zoom in just to see if we can see this a little better. So just imagine a scenario. One of the beauties of understanding the markets in the way that we do is we're not taking trades when everyone else is taking them. So this exciting move does never affect us in terms of it. In terms of, yes, it makes us want to look at the price, but it doesn't affect us in terms of making us want to take a trade per se. And it certainly doesn't make us want to do it in the way that everyone else does. What it does, it highlights when we should be paying attention, because this is really what it is it's a trap. It's a fishing expedition. That gets an awful lot of traders in trouble. And even if this minor pullback, even if like that didn't get every trader, this stop hunt does, because the way that this move has elongated price, a lot of traders wouldn't want to put their stop loss below this ultimate low in here. It's too salty for people. The psychology of a large stop just doesn't sit well with people. If you've got a smaller trading account, you're trying to get a tight entry, right? A really small stop, because that way you get to, trade with more money, bigger position size. The education out there tells you to do it. You're also attempting multiples of R. So if this is your R, i.e. your risk, and this is your potential upside, that's upside, pardon the pun, but that's upside down, right? That's not the right way around. You're risking more than you're going for in potential gain. And there is arguments for the fact that there's a probabilistic element that needs to be factored in. If you're giving something more room, even if it doesn't travel as far in terms of your target, you are statistically giving it slightly more room. But from a risk perspective standpoint, traders just don't like doing it. So what that does is that allows you to understand a few things that are definitely a situation in this particular set of circumstances where you have an elongated move like this. The only, excuse me, I've messed that up. The only sort of area on this chart where there's really any local, like an oasis, if you will, was in here, up at the 75. I think it's more or less the round number. Forgive me, I can't see it that well. 79.04, yeah. So it's about that. They don't want to go below here. So I then know, just simply by observing, that there's a lot of traders got stopped out in here. There was a lot of liquidity hoovered up in this little area here, because the psychology of the move, the elongation of the price causes a problem from a risk standpoint. So this is where they will hide in terms of where they will place their stops. And what that does is that that means their behavior becomes very predictable, and they'll cluster quite tightly to these structures, because there's literally nothing else anywhere below them to do so, only too far away as far as they're concerned. So does that mean every trader in the world has done this? No, of course it doesn't. It just means that a lot of traders who happen to be trading this particular pair on this particular day in history, on this particular time horizon, if there were that type of trader as well, bear in mind that we're talking about retracement traders in here, stroke momentum traders. Yeah, it caught those traders for sure. And then, so if we then follow it through, you've got these equal highs in here as well, where traders have tried to be cute and they tried to sell off that level. Well, lo and behold, look what's happened. They've been stop hunted. Not only stop hunted, there's that spike above those highs. What that's done is that's introduced some buy side liquidity. And what's going to happen now, if this didn't get all the stops, you're going to see price come down and absolutely crucify anyone who does have stops sitting slightly lower then that area there, pinching off those structures. If anyone's gone a little deeper, they're going to get done in the next few days. That's for sure. And these poor souls who bought at the absolute high of this particular scenario, it's obviously not the absolute high, but the absolute high in this scenario, they're going to be dragged into a dark place where they don't want to be, and squeezed. So it's just this whole area, what it is it's a perfect example of liquidity being pinched and being hoovered up and then being used, and unfortunately, manipulated, however you want to describe it. And what's likely going to happen now is we're going to see that drop. Now, the reason why I highlight this area in here is this is where I'd be interested in looking for a long. And in particular, why that is because what you'll notice is you've got one of the reasons, big reasons, is this very accurate level here. You've sort of got 5-6 touches of that price point, 75, 75, the 175, 75 figure. This is a massive, massive target. It's my bad drawing of a target. Massive target, loads of stops above there. These are, not particularly confident highs. Where on the other hand, if you look at this low, this is the monthly low. There's also a previous month high just off to the left. Apologies, I can't show you. It's just off to the left. It's not that much higher. All of January's high is just not far above these structures. So that's a little bit exposed to me. This monthly low seems very, very confident, in my opinion. You notice how it completely pivots away. So what I think is going to happen is I think these traders are going to be dragged into deep water. I think these traders are going to be utterly stopped out. And then I think it's going to attack those highs and perhaps go on to do a confident print of a monthly high. This could literally be just the sort of the springboard for a positive month. There is a bid around for sterling. Why, I have no idea. I do know the reason why. We're doing a fairly decent job in comparison to other countries in terms of rolling out vaccines. However, we're a total disaster when it comes to this pandemic. I know most countries are, but on the ground in the UK, we're no geniuses, put it that way. And it's just come out this morning, shock horror, totally obvious and predictable, but the media had been sort of denying it for weeks, that the new South African variant that's been found in the UK, the AstraZeneca Oxford vaccine barely works against a mild version of that version of COVID. So essentially, it's a worse version of COVID, and the vaccines we have are useless. And you won't find that on the big headlines of the likes of the BBC, the mainstream media, just being buried away in some subsection of the article, the pile of articles that they produce every day. So yeah, that's a shit show about to unfold, because that's obviously going to be a problem. We're vaccinating everyone, and it's not, and the new variant doesn't care, and that new variant is on the ground in the UK. Having said all that, there is a positive bid around for sterling currently, and I think at the very least, big money's going to reload on this move higher, and then as I said, do what they're going to do with regards, or do what they are doing with regards to the manipulation of this section of price, and then have a go at these highs. In terms of how you play this, you place a stop below this low by 5-10 pips, whatever it is, the 175. Is that 175? You'll probably be able to see that better than me. 175, 173, 50 is the kind of in and around that number. Place your stop there. You'll probably be quite okay to trade it up to these highs, taking the majority of your position off at that point, or running, depends how you split your risk up, but certainly take off a good portion there. In terms of your risk reward, that's extremely acceptable. You're risking X to get Y. It's multiples of R. And I do think, given the early period we're in the month, given I think this is a very confident low, and given the fact that I think last month's high is exposed somewhat, and the weak hands here are the shorts, and unfortunately the late longs, I think we're probably going to go beyond that. So just bear that in mind. Obviously, play it accordingly, but certainly from a risk reward perspective, however you dice it, even if you were to exit all your position over there, that's a pretty decent trade. But as always, none of this is financial advice. Trading CFDs is hugely risky. You'll probably lose all your money. I could potentially give you the world's greatest trading strategy and you'll make a pig's ear of it and a complete mess of it. Everyone's different, and this is not financial advice. It is purely for educational purposes only. Until the next video, hopefully, if I see anything in the coming week, I'll get that email out to you. So keep an eye out for that. Please do subscribe to the YouTube channel, share the videos with your friends. Until next time, take care.